Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. It's a windy day here in Playa del Carmen, and you can say the same thing with the markets. It's been pretty turbulent, a lot of volatility. The VIX hasn't spiking above 30, and this week with all the earnings that are coming, Microsoft today after hours, tomorrow Tesla after hours, and on Thursday Apple after hours. Some of the biggest companies in the world reporting their earnings, and especially with the Federal Reserve, Jerome Powell talking tomorrow on Wednesday around 2 p.m. and he will be touching upon what has been spooking the markets over the past couple of weeks, interest rates, and what their plans are for 2022. And what we can notice on a lot of charts is that today we see a lot of indecision. We see large wicks on the top side and the bottom side of a lot of candles, meaning there's a lot of indecision, a battle of sorts between the bears and the bulls to see which one will take control, and we'll probably get a lot more clarity tomorrow after Jerome Powell speaks. But until then, we just have to wait and see how the market perceives what he says, and especially after big tech reports, because they have been the ones that have been holding up the market for the better part of the year. And if they don't deserve the valuations, because a lot of people have just been putting their money into safety into these big tech companies, including myself, if they start faltering, then we could see a lot more weakness into this market. But hey, if they report some pretty good earnings, as well as some dovishness coming from Jerome Powell, we could see a very, very quick and strong recovery. As fast as we've fallen over the past couple of weeks, we can go right back up. Not saying that's happening, but we can move very quickly in the market, creating these instantaneous 180 movements. Let's get right into the video. If this is your first time on the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button. It's windy out here. Let's get started. All right, starting off with the S&P 500 heat map. So we see a lot of red in big tech. Again, Microsoft down 2.66%, and they had just reported earnings, which we're going to get to momentarily. Apple down 1.14%. Nvidia down almost 5%. All the semiconductors down. Software down as a whole. Google down almost 3%, almost near 2,500. Facebook or Meta platforms sitting right at $300 a share. Amazon at $2,800, and Tesla right now at $920. Netflix down an additional 5.35% at $367 per share. Financials, MasterCard and PayPal taking a beating. Visa only sideways, with the banks green on the day finally after a lot of selling off over the last couple of months. Bank of America, JPM, Wells Fargo, Citigroup, as well as Berkshire with healthcare. We're seeing a little bit of green. With the rest of the industrials more or less looking like a mixed bag, we see a lot of red in the industrials and even in consumer defensive, whereas we actually had a very, very green day when it came to energy and oil. All right, and taking a look at crypto, so Bitcoin first, recovering a little bit from the lows from a couple of days ago, now sitting above 36,000. Ethereum, we were near the lows of about 2,000 a couple of days ago, and now we're sitting at 2,400. Cardano pretty much near its lows, sitting near $1. Solana under $100, which is crazy. XRP at 60 cents. Dogecoin at 14 cents each. So today with earnings, we have a very big name in the market, Microsoft. So let's take a look at that one. They beat on earnings and revenue for fiscal second quarter. They surpassed expectations on the top and the bottom line, so they had a double beat, and the company's gaming business is the spotlight after Microsoft said it would acquire Call of Duty publisher Activision Blizzard for $68.7 billion. So they reported $2.48 per share adjusted versus a $2.31 a share that was expected by analysts, and revenue at $51.73 billion versus the expected $50.88 billion. And even though revenue increased by 20% year over year in the quarter, compared with almost 22% growth in the previous quarter, their net income of $18.77 billion swelled by 21%, and the company had $36.77 billion in unearned revenue at the end of the year, below the street account consensus of $36.9 billion. And despite all of this, with all the market conditions that we have been experiencing, with all the sentiment, all the craziness and volatility that has been going on, the stock dropped an extra 4.5%. We are now sitting at $276 a share. And when we take a look at the candlesticks of Microsoft, right now we're sitting where the blue line is after hours. We closed over here where the red dotted line is. And we can see just a couple of weeks ago at the beginning of 2022, at the end of December, we were over $340 a share, now sitting at $275 a share. Officially oversold on the RSI. With increased volumes, especially over the last couple of days, we're now sitting pretty much at the lows of Monday morning. Me personally, I hold positions in Microsoft, and I actually sold calls right before the close today. So even though I'm probably going to be making 100% profit on those calls that I sold, at the same time, my long positions are probably getting destroyed at the moment, but that is the short-term price that you have to pay, the volatility that you have to pay. You have to be a robot with these things, because the whole idea of selling covered calls while you hold your long positions that you're bullish on in the long term is that while they're going sideways, while they're experiencing volatility and going down, not to mention that the price of the calls that you're selling increase when volatility also increases. In a way, it's like creating your own dividends. Right now we're sitting at 273. This can change drastically by tomorrow's open. We could really open anywhere depending on how the Nasdaq and the S&P 500 decide to do, especially again with all the news that's going to be coming out tomorrow with the Fed and Tesla earnings after hours. So taking a look at the Nasdaq, so on Monday, we fell all the way down to about $334 on the QQQ, and then recovering by the end of day from maybe minus 4%, being positive on the day. But today, Tuesday, didn't fare so well. Again, we see the long leg doji. So tomorrow is going to tell us a lot. We are at an inflection point, officially oversold, but we can very easily continue to sell off despite where we are on the RSI. The market does what the market wants to do. It doesn't matter what your feelings or where you want it to go. It just goes where the price action leads it. When we look at the S&P 500, it's a similar idea because we know tech weighs so heavily on both indices of the Nasdaq and the S&P 500. So Monday again, we sold off and then recovered. Today, with that doji candle, tomorrow is going to tell us a lot. When we take a look at the FANG index, we don't see the doji candle because this is updated after hours, including the Microsoft earnings being taken into consideration, and we used to see a red candle. So if it wasn't for the earnings, we would likely also be seeing a doji candle. We do, however, see a doji candle on the VIX. This also makes sense. We don't know whether we're going to be fearful tomorrow or not. So if Jerome Powell is dovish, we can see this inflect toward the downside. But if he comes out hawkish, the market might not like that at all and freak out, and then this continues going on higher and higher. So we're definitely at an inflection point of sorts. Are we just going to go up or are we going to go down? We're going to know very, very shortly. 10-year yield is hovering around 1.8. After spiking last week just below 1.9, we've retracted a little bit, finding pressure around that 20 EMA. For the time being, it looks like we're going to be between 1.7 and 1.8 until we break that either toward the upside or the downside. So taking a look at Bitcoin on the daily, so here is our downtrend that we keep rejecting off of. We continue finding supply and a lot of selling pressure. We still have a ways away, maybe a couple of weeks until we get nearby this trend line if we are to consolidate and move sideways. Again, it doesn't necessarily need to wait the 2 weeks to reach this trend line. It can continue to sell off if it wants to, or if we find some kind of recovery and break the trend line, that could happen before the middle of February, again, if we were to consolidate and move sideways. It is encouraging that we found some buying pressure at the $33,000 mark. So until further notice, that's going to be the short-term bottom until we choose a direction. Until then, we're just going to be following this one closely until we break our downtrend and can start getting excited about Bitcoin again. And a word for word, what I just said about Bitcoin, you could probably say about Ethereum. So again, until this one reaches the trend line or probably the 20 EMA, we're going to go sideways or downward until we break this trend line. Alright, that's the end of my video. Thank you very much for watching. Let's see if the turbulence continues in the markets this week with crypto and stocks. Let me know in the comments below. What do you think Jerome Powell is going to say and what is he going to do to these markets? Let me know to the comments below. As always, subscribe and like, and I'll see you in tomorrow's video.